Okay, good evening and welcome back everyone to our options education webinar series. My name is Tony Zhang. I'm the chief strategist here at OptionsPlay. And today I want to talk about a topic that is very near and dear to my heart, which is technical analysis. But more importantly, not just what is technical analysis and how do you use it, but what are the tools that we have built here at OptionsPlay that allow anyone, even if you're relatively new to charting or if you're not 100% sure as to how to utilize charting, to be able to leverage it and use it for your own trading and be able to find opportunities and ideas for the stocks that you want to follow. This all comes down to the fact that when you're trading options, you need to have a directional view, whether you're bullish on a stock or bearish on a stock. How do you determine that? And how do you have a consistent way of determining that from day in and day out? So that's what I want to discuss with you here today are the tools that are developed here at OptionsPlay, what they are, how you should utilize them, and show you how you can quickly scan for opportunities using the OptionsPlay software. So before we get started, what we're going to discuss here today is purely for education and demonstration purposes. It is not a solicitation or recommendation to buy or sell any specific securities. Now, before I get started, I just want to do a quick count here from all investors. If you could please bring up your chat window, which is at the bottom of your screen. How many of you are familiar with technical analysis or use technical analysis for your trading? Please type yes into the chat window. And if you're not using technical analysis, if you're not familiar with it, please type no, just so I could get a quick sense for the audience here in the room. Okay, pretty much it seems like everyone has said yes with the exception of one no. Okay, so I will, for those of you that are sort of or not using technical analysis, I'll give you a brief overview as to, what are the main uses of technical analysis and why it's important for, at least for my trading. Tell you a little bit about the different types of methodologies that we use, and then show you how OptionsPlay automates that for you predominantly. But the primary thing I want investors to be able to walk away from today's session is understanding how can you leverage technical analysis to quickly gain a directional view on any stock. And the key word here are two words: quickly and on any stock. Because when you're looking at fundamental analysis, you may have a good sense for how to do fundamental analysis on one specific industry or one type of sector, but it's not necessarily always applicable to any stock that you look at. And typically fundamental analysis takes quite a bit of time. For me to do some fundamental analysis on a stock, briefly, just to do a gut check, it usually takes me a couple of minutes to pull the data, look at the data, and make a sense. And then if I want to dig a little deeper, that could easily be a 30-minute, 1 hour process to do a little bit of a deeper dive from a fundamentals perspective. So that's one of the reasons why I leverage technical analysis, is because it can be done very, very quickly. And I'll show you how to go about doing that. But that's what I want investors to be able to walk away from here today. Now, my name is Tony Zhang. I'm the chief strategist here at OptionsPlay. And I have been, using technical analysis in my trading for about 15 years. I started the market using technical analysis for currency trading. For those of you that are in Europe, you tend to be a little bit more familiar with currency trading because you're used to exchanging Swedish crowns or Norwegian crowns or into euros. And you're much more familiar with exchange rates and kind of the fluctuations of it. And I've used technical analysis very heavily for currency trading. Before I traded futures, and now I trade options on stocks. So all of this allows me to take what I've learned from currency trading and technical analysis in currencies and apply them to other markets. That's why I'm able to look at foreign markets that I'm not as familiar with, or I don't trade intimately, or I'm not familiar with the fundamentals of that country or the fundamentals of that company, and be able to analyze and quickly gain a directional view. So that's what I'm hoping to be able to show you as to the value of technical analysis and how you can automate it using the tools that we have created. Now, Corinne, I see that you have a question here, and I will address your question regarding, how you can look at this. But I will address your question here towards the end. Now, I'm going to use a platform called OptionsPlay here today to show you some of the technical analysis tools. Now, many of you here already have access to OptionsPlay, but if you have not signed up for it, it's a free tool to register for. You can sign up for it at optionsplay.se. which I just posted into the chat window for those of you that want to sign up for a free account. This allows you to access the tools, which gives you the technical analysis as well as the options trading tools that you'll need for trading the Nordic equity markets. So let's go ahead and get started. But the primary, I think, concern that most investors have these days, at least I can certainly speak to it myself, I think most investors have the same issue, is what we call information and data overload, meaning we just have simply access to too much information. Whether you're getting information from your brokerage firm, whether you're getting information from a news site, whether you're getting information from a third-party source that you subscribe to that give you type of analysis or research or directional signals, whatever that is, we tend to have too much information these days. And what we have is effectively what we call information overload. One thing tells us this, the other thing tells us that. One thing is short-term, one thing is long-term, and we have to collate all of these things into a digestible view as to whether we think a stock or a market or a sector is going to go higher or lower. And this is something many times gives us conflicting signals and causes, what we call paralysis by analysis. Just too many things to look at that we can't quite figure out what our true directional view is. Now, if any of you can relate to this, please type 1 into the chat window. If sometimes you find yourself having access to too much information where certain different things are giving you different signals and you're not quite sure what's your directional view. And this is something that everyone, has an issue with, and technical analysis does not necessarily in itself help with this. Okay, technical analysis many times actually adds to this confusion. So the question that many investors have is, how do we simplify? How do we simplify all the information that we have in the world into a uniform or single source? And that's really where the beauty of technical analysis comes in, because the concept of technical analysis is the fact that the market is already consuming all possible pieces of information that's out there, and that information is reflected in the price itself. That's why, as a technical analyst, if you truly ask someone who's a certified CMT, as a chartered market technician, what is the first indicator they look at? It's always going to be price, because it's the idea that all information that's available out there, fundamental analysis, technical analysis, news-driven analysis, all that information is publicly available and it's already incorporated into the price, because we believe that markets are efficient. It incorporates all the information that you need there, so you can effectively gauge how the market is reacting to all the information out there by looking at how the price of an asset is responding. And when we look at the asset of that price, and we look at the price of the asset, what we can do is we can do different things on that price action to gain a way to predict the future. What we're trying to do is basically identify patterns that have happened in the past and apply them to what is likely going to happen in the future. Now, when we look at price analysis, there are quite a few different ways that you can do this. Now, from my perspective, this is really where some investors feel confused, because they feel that there's so many different ways that you can look at this price. I can look at a 1-hour chart, I can look at a daily chart, I can look at a weekly chart, I can look at this moving average, I can look at that moving average. And since so many of you have say that you use technical analysis, if you feel overwhelmed by technical analysis itself, please type 2 into the chat window. If sometimes you feel that the charts can be very confusing as well. And I certainly can understand this. As a market strategist doing this for 15 years, I have seen just about every single charting package under the sun. I have seen different people with 10 different charts on their screen. I have seen people with very few different charts on their screen. It really comes down to how complicated that you can make it, which is why, as a technical analyst with 15 years of experience, what I try to do these days is I try to keep my charts as simple as possible. The simpler my charts are, the easier they are for me to analyze and gain a quick directional view without finding myself being conflicted. Sometimes I see people with 8 charts on their screen on all different time frames. They have all these different types of indicators. And from my perspective, that just adds to the noise and makes it difficult to understand. So when I look at a chart, the first thing I look at is what I call horizontal support or resistance, meaning horizontal lines are not subjective. They're very easy to draw. And if two people had to draw horizontal lines on a chart, we would all generally find the same type of lines. So for example, I think this is an example of a horizontal support or resistance line that we can draw, that no matter who draws, we would generally all draw the same type of horizontal line. This removes subjectivity. Now, there are other lines that you can draw called trend lines. This is really where it does become a little bit more subjective, but a trend line would be an example like this, where you have multiple instances of the stock touching the same trend line over and over again until it breaks out above that trend line and reverses trend, right? So we can say that during this time, the stock was bearish, and then it turned bullish again. And then you can really get subjective with this again. You can say, okay, now that the stock has turned bullish, here's the bullish trend line. Multiple times it touches it, but finally breaks it again. So now you have a bearish trend again. So trend lines, in my opinion, are a little bit more subjective, right? You can all draw different trend lines. Some people like to draw long-term trend lines. Some people like to draw short-term trend lines. And that's really where you start getting some subjectivity again. So, then there was a concept of moving averages, and moving averages are kind of like automatic trend lines, because if we draw a 200-day moving average, there's no subjectivity in that. Everyone that puts on a 200-day moving average sees the exact same thing. That's what I have here on my chart. This red line here is a 200-day moving average. So here we got a break below the 200-day moving average. Excuse me. We have a break below the 200-day moving average. That is a bearish trend. You have multiple attempts to break above that 200-day moving average, but fails. So it failed to break above that and turn into a bullish trend and resume its bearish trend until recently, a couple of days ago. This is a chart of H&M. And H&M just broke above the 200-day moving average again just a couple of days ago. So the question is, has H&M basically stopped this long-term bearish trend and is now turning bullish again? So you can think of moving averages as kind of an automatic trend line, but people start asking the question, should I draw a 200-day moving average, a 100-day moving average, a 50-day moving average? And you start having the same problem. And what you start to see is that, technical analysis can be an important tool, but you can still go down plenty of rabbit holes as far as how do you go about determining that ultimate trend. So this is really where we're going to show you how we automate this to make this easier for you so that you get a consistent reading day in and day out. So what I always teach investors who are interested in technical analysis is to, number one, keep things simple, right? So for example, when you draw a horizontal trend line, that tends to have less subjectivity. Everyone generally will draw the same horizontal trend lines. That is a good practice to have so that you remove subjectivity. The more you remove subjectivity from the equation, the more likely you're going to be more consistent in your analysis. The second thing I would suggest for you is that find a moving average that suits your trading time horizon. For example, if you are a long-term trader, if you hold on to positions for months at a time, potentially years at a time, then the 200-day moving average might be suitable for you. But if you're a day trader, or if you trade very short term, you might want to use a much shorter moving average. But whatever moving average you choose, make sure you use just that one moving average, and you don't switch between moving averages depending on what day you choose to open your charts. I've seen this a lot of times from investors who use technical analysis where, on some days they'll use the 200-day moving average, on other days they'll use the 50-day moving average. If you want to be able to remove subjectivity from your analysis, what you have to do is stick to a single moving average, stick to a single trend line, right? So when we think of moving averages as an automatic trend line, then keep the same moving averages day in and day out. And I'll show you how OptionsPlay does this. But this is the first piece of analysis, is trend, right? Trend gives you an idea as far as whether an asset is trending higher, trending lower, or maybe trending sideways. That's an important starting point to gain that directional view. But a very important secondary measure that technical analysts like myself will use is not just comparing the trend of a stock against itself, because when we look at this moving average here and we say that H&M broke below the 200-day moving average and is now trending lower, that's telling us that H&M is trending lower compared to itself. if you really want to have higher probability trades, if you want to find better trades that have a higher probability of success, what you also have to understand, not only is the stock trending higher or lower against itself, but an important measure is looking at how is the stock trending against the market. Now, just to be clear, what I'm showing you here is a weekly chart. This is a long-term chart, okay? This is not a short-term chart. This probably expands 3-4 years of price action here for H&M. So this is the same chart for H&M, but we compare it to the OMX S30 here. So what's not only important is the trend of a stock against itself, but how is that stock performing compared to the broader market? So that is an important thing that we call relative strength. Relative strength gives us an idea as far as how the asset is performing against the overall market, because sometimes H&M could be in a long-term downtrend, but what if during that same time, and let's just say in this particular case, H&M was roughly around 360. It declined all the way down to about 120 or so. So this is roughly about a 66% decline over these multiple years, when it went from 360 crowns down to 120 crowns, right? About a 66% decline. But the question is, what if during that time, the market went down, let's say 80%? What if during that same time, the market went down 80%? That means that H&M actually, even though trending lower, is outperforming the broader markets. And that's an important thing to know, that if you just look at a chart of H&M, you don't get a sense for that. And that's why we always look at relative strength. We compare the asset compared to the broader markets. Now, generally speaking, if you're looking for a short opportunity, you want to see stocks that are underperforming the broader market. So when the asset is moving, let's say the asset moves 66% lower, generally it's a good idea to short these types of stocks when it's a bearish trend. If, let's say, during that same time, let's say the market during that time only went down, let's say 40%, right? So this is a stock that's underperforming the markets, that has a higher probability of continuing to move lower, or move lower at a faster rate than the broader markets. Does that make sense, everyone? Please type 3 into the chat window if that makes sense to you. On the same token, right? If H&M is truly starting to outperform here, right? It's breaking out above its 200-day moving average. What you want to see is that it's also breaking out relative to the market. Now, in this particular case, we're not seeing that, meaning H&M in this particular case is moving up maybe from, let's say, around 120 to 180 or so, right? That's about almost a 50% gain during this short amount of time. This is from the March lows to where they're currently sitting right now. But notice how during that same time, relative to the market, it's basically flat, meaning it's not really outperforming the broader markets. So this tells me that, you know, H&M is basically moving up 50%, but the market also moved up 50%. So, you know, if you're really choosing between two stocks, you know, so because there are plenty of bullish stocks, right? You don't want to just pick any stock that's bullish. You want to pick stocks that are bullish and outperforming the broader markets, so that as the markets continue to move higher, let's say the markets move 60% higher, you want to see a stock that's going to rise 80% because it's outperforming the broader markets. So it's really important not just to look at the trend of a stock, but also looking at how that stock is compared to the broader markets. So for that, we use relative strength. So here at OptionsPlay, we have two metrics that are very important for trading the markets. We have what we call trend analysis, and we have relative strength. Those are the two things that we just talked about. Now, like I said, one of the challenges here is that just because you're looking at relative strength does not, just because you're looking at trend analysis, you know, there's lots of ways to look at trend analysis. You can draw trend lines, you can use moving averages, you can draw your own support or resistance lines. There's so many different ways of doing it. So what we do here at OptionsPlay is we use 3 moving averages. We use the 20, the 50-day, and the 200-day. We only use those 3 moving averages. We never deviate from that. And what we use from those 3 moving averages is we calculate the 1-month and 6-month trend. The 1-month and 6-month trend. And what you get to see that is right here on your OptionsPlay platform. You get the 1-month and 6-month trend, And what you get to see it is how that trend has changed over time. So not only do you get a sense for what is the current trend, but how has that changed over time, or how long has the stock been in that trend for? Has it been in this trend just for a couple of days? Has it been in the trend for 3 months? Because those are important things that you need to know as far as, whether you're catching on early on a trend or you're quite late to the trend. So these are how options play shows you what the trend of a stock is. Now, the benefit of using our trend indicator is that we always use the same moving averages. We never change it. We never say that today we use this moving average, tomorrow we use that moving average, which, as human beings, we tend to change things up. Sometimes our emotions get involved in this. We inherently have biases. Sometimes that, we're bearish on a stock, and maybe we normally use the 50-day moving average. If the 50-day is actually showing a bullish, signal, so then you start to change the moving average until you find a moving average that agrees with your bearish bias. I mean, we're all guilty of that, right? And we do it subconsciously sometimes. And so that's why we created this tool, so that you cannot change the algorithm for how we determine bullish or bearish. It's the same algorithm day in and day out. That's how you're going to get a subjective and consistent reading on the stocks, on any stock that you plug in, and what the short-term and long-term trend is, and see how long that stock has been in that trend for. Okay, so that's first how options play helps you identify trend. And then relative strength, what we do is, instead of just telling you whether a stock is outperforming or underperforming the market, what we do is we rank every single stock in the Swedish markets against each other. And what you get is a score of 1 to 10. 1 to 3 are the weakest stocks in the market. So this is telling you stocks that are underperforming the broader markets. Stocks with 7 to 10 are the strongest stocks. They're outperforming the markets. And 4 to 6 are neutral, meaning they're basically performing on par with the broader markets. That's how you can measure whether a stock is outperforming, underperforming, or neutral. Now, the thing that I want to make sure that investors understand, a lot of people ask us, does 1 to 3 mean that it's bearish, and does 7 to 10 mean that it's bullish? And the answer is no, because if the stock is, let's say the market is down, let's say 50%, which is what we saw from February to March, right? A stock with a score of 10 might still be down, but it's just down, let's say, maybe 15%, right? So just keep in mind that this stock that has a score of 10 is one of the strongest stocks in the market, but it doesn't mean that it's bullish. It just means that it's outperforming the broader markets. So if you're looking for opportunities in the market, you can't just look at one or the other. If you only look at trend, then you're missing that relative strength picture. If you're looking at just relative strength, then you're missing the overall trend. So what we want to show you is how can you use these two indicators in conjunction with each other to actually gain a directional edge. So for that, what I'm going to show you are 4 possibilities that you can use with trend and relative strength to identify specific trading opportunities. Now, let's start with bullish ideas. All right, we're going to look at bullish ideas. There are 2 categories that I tend to find with bullish ideas. We have what we call trend following, and then we have what we call counter trend. And trend following, I think, is pretty straightforward, that most investors can understand. This is really where we're going with the trend. We're finding stocks and we're trying to go with the trend. So this means, a strong bullish stock, or what we call a trend following stock, is a stock that has strong relative strength, meaning a stock that is outperforming the broader markets, and it currently exhibits bullish trends. So that's pretty self-explanatory, and I think that's fairly easy to understand. Now, a counter trend trade is where you have a stock that currently has weak relative strength. So this is a stock that's actually underperforming the broader markets. But what we're starting to see is that it's exhibiting bullish trends. So this is a stock that basically has underperformed the broader markets and is now starting to turn around a little bit and starting to curve to the upside. So trend following is just looking for stocks that are in its trend and continuing on its trend. And counter trend are stocks that are actually moving lower, but starting to turn back around. Okay, so those are the 2 possible types of bullish opportunities that you can identify using trend and relative strength. And I'm going to show you how to actually find these stocks using OptionsPlay. On the bearish side, we have the exact opposite. We have bearish trend following stocks, and we have what we call bearish counter trend stocks. So a strong bearish stock are stocks with weak relative strength, so stocks that are underperforming the broader markets, and they're still exhibiting bearish trends. So not only they're underperforming the markets, they're also continuing to move lower. Counter trend is the exact opposite. These are stocks with strong relative strength, but now exhibiting bearish trends. So the trend following one is where effectively you have a stock that's moving lower, maybe starts to move a little higher and continues to move lower, and you're basically finding this bearish trend that continues. Counter trend is the exact opposite. It's where stocks that are making big moves to the upside and then starting to turn around. So we're trying to identify one of these two states. So how can you use options play to identify stocks within these four categories? And it all comes down to our watch list feature. Our watch list feature is actually built to color code and allow you to quickly find stocks that fall into one of these four categories. So when you use the options play tool, when you pull up either the trade ideas panel or the watch list panel, there is a column here called the score. The score is that technical score that I'm referring to. So as you can see, this is a watch list that I created just before this webinar. And as you can see, there are stocks that have low scores, 1, 2, 3, 4, and then there's stocks with high scores, 8, 9, and 10. And as you can see across the board, they're all also color coding, right? You have the 1 month trend, which is right here. And then the bar here on the right, on the left-hand side is actually the 6 month trend. And what this allows me to do is very quickly visually see which stock falls into which category. So when I'm looking for strong bearish stocks, this is stocks like Swedish Orphan, Fingerprint. These are stocks with low scores. And as you can see, they're red across the board. So without having to pull up a chart, without having to do any research on the stock, I already know out of this 8 stocks in this watch list, these 2 stocks, if I'm looking for bearish opportunities, are probably where I would start my research, because these are stocks that are underperforming the broader markets and they're currently trending to the downside. Okay. Now, on the flip side, if I'm looking for bullish opportunities, Volvo and Kinnevik are the 2 stocks that I would look at that are bullish because they have scores of 9 and 10. So strong stocks, they're outperforming the broader markets. And if you look across the board, they're both green, meaning their trends are bullish. Now, this is again designed to allow you to quickly identify out of a watch list or stocks that you want to look at, how you can quickly identify potential bullish setups and potential bearish setups without having to pull up a chart, do the research, look at the chart and analyze it for yourself, because the algorithms that we have created are already built in there for you. Now, for those of you that are counter trend, for those of you that like to find opportunities and you want to find stocks that have bottomed out and are starting to reverse higher, or stocks that are really strong and starting to reverse lower, that's where we can turn to the turnaround trade. So we look at Nokia and Saab. As you can see, these have low scores. So these are stocks that are underperforming the broader markets. But as you can see, the 1 month trend has started to turn bullish. Now, the 6 month trend hasn't turned bullish yet. But for example, Nokia could be an example of a stock that's starting to turn around. We're starting to get the short-term trend turning around. The long-term trend is still neutral or maybe still bearish, but we're starting to see the early potentials of a turnaround story. So, for those of you that like to pick bottoms, or if you like to buy stocks when they're low, here are opportunities for you to do a little bit more research. Now, I'm not suggesting that you should just trade on these alone, right? This is really where you want to do a little bit more research. You want to pull up that chart. You guys all use technical analysis. You may have indicators or strategies that you want to use, but this helps you filter out of all the stocks you can trade, which ones are the opportunities that you want to seek. In this particular case, Volvo and Saab. And maybe after you look at the charts, you might do a little bit more fundamental analysis, look at the revenues, look at the dividends, look at those other factors that you want to use from your fundamental analysis perspective. And then lastly, if you're looking for bullish turnarounds here, Husqvarna and JM, as you can see, are stocks with strong scores. But as you can see across the board, the 1 month trend has already turned bearish. And the 6 month trend is, in this particular case, neutral. So meaning these were strong stocks, but they're starting to turn around. And I haven't pulled up a chart here. I've not looked at any of these stocks yet, but I can tell from my watch list which ones are bullish stocks, which ones are bearish stocks, which ones are ones potentially turning around. And this is an extremely powerful tool so that you can sort the trade ideas by it. You can sort the pre-built watch list by it. You can create your own watch list and sort it by the same way, but it's all designed to allow you to quickly identify these types of opportunities. So with that, what I'll do is I'll bring up the OptionsPlay tool, and I want to show this to you. Here's that watch list that I had originally created, directional edge. And let's just look at some of these charts together, right? Let's look at Fingerprint Cards. As you can see, score of 1, meaning as the market is making new all-time highs, right? So the OMX S20 is making new all-time highs. This stock is actually pushing new lows. That's why it's one of the weakest stocks in the market. So if you're looking for short opportunities, you want to find stocks that are underperforming the broader market and they're currently trending bearish. Now, this stock has been trending bearish pretty much since October 13th here, when it was trading at about 16 crowns. Now it's down to 14 crowns. And you might want to do a little bit more fundamental research to understand why is this stock underperforming so bad, so poorly. Is there something else? Is this the type of stock that is going to not perform well during a recession? My understanding is this is a company that provides securities, for a lot of businesses and companies. And if people are not going to the office and people are not, spending time in businesses, there's just smaller demand for the security stuff that they create. And that is the fundamental thesis for why this stock is underperforming. And when you're able to take that type of knowledge of the fact that the stock is underperforming, it's trending lower, and fundamentally this stock is likely going to continue to underperform because of the business that they're in, that's how you make a strong case for a bearish opportunity here in a name like this. On the flip side, if you look at an asset manager that is doing very well, if you look at asset managements, equity markets around the world are at all-time highs. These types of asset management firms that make their money on fees, they're going to collect more fees. And that's why an asset manager like this continues to outperform in the broader markets that we're in. So this is a stock that's, has a technical score of 10. It's outperforming the broader markets. As you can see from the March lows, it went from 135 crowns to 400 crowns. That greatly outpaces the current market or the Swedish markets. So one of the strongest stocks in the market. The 1-month trend is still bullish. The one thing I will say is that it's been in this bullish trend for a long time. So it's important to understand that you are a bit late to this game. And if you want to continue to push this, you need to be aware of that. And that sometimes can factor into your ability to decide whether this is still a good opportunity for you or not. If you discovered this stock back here in September, when it actually struggled for a bit of time here, it actually struggled for a little bit of time from a trend analysis perspective, as you can see during mid-September, and then started to resume that bullish trend again. That would have been a good time to get in. In my opinion, this is a little bit late because, this trend is already been, almost 3 months old here. So be careful. But Volvo, let's take a look at Volvo. Volvo, a little bit not as late, but it has moved quite a bit here. As you can see, we identified this on November 2nd. On November 2nd was when Volvo, with a relatively strong technical score, the 1-month and 6-month trend turned neutral for a little bit of time and quickly reversed to that bullish trend. This was around 179 crowns. And ever since, it's now rallied up to 203 crowns. So this is an idea of a potential bullish trade that you could have made here using Volvo. And then on the flip side, if you look at a name like Nokia, Nokia, was pretty strong, off of the March lows from about 24 crowns all the way into the 50 crown range, but recently has really started to turn south. It turned south, the trend quality started to deteriorate here on August 28th. That's when our first 1-month indicator turned neutral. On September 2nd, our 1-month and 6-month trend turned away from being bearish. And since then, the stock has basically underperformed since then. But as you can see, it tried to turn around here, but the 6-month trend remained bearish this whole time until just today. Today was the first time that Nokia turned bullish from As you can see here, it broke out above this recent high here and started to turn bullish here. So this is a very early opportunity. And, sometimes you get some false signals, like for example here, this turned bullish here. But, the one thing I will say that the 6-month trend remained bearish the whole time. So it never turned bullish. Here, the 6-month trend actually turned neutral here. So this could be the start of a bullish move here for Nokia. Now, I haven't looked at the fundamental business here for Nokia. I know that there are some interest in terms of Nokia as a 5G play, but I'm not too familiar with this. So this is where I would advocate, if you're interested in a name like Nokia, do a little bit more research on the company, why there is prospects for this company to outperform here in the short run. But this is currently a company that is underperforming the broader markets, but is starting to turn around here. And then vice versa, if you look at Husqvarna, strong stock. So if we pull out a little here, very strong stock from the March lows, from 37 crowns all the way up to well over a little over 100 crowns. So we're talking about almost a 200% gain here. So one of the strongest stocks in the market. But clearly over the past couple of months started to move lower. So, that had a high on October 20th, failed to reach that new high again in November, and is starting to roll over again here in late November. So this is a potential opportunity for a move lower here. Now, this trend is a couple of weeks old, right? I'm guessing this big move was probably because of earnings. The next earnings is 70 days away. So that sounds about right here. So you probably had a big move because of earnings. It's now recovered a little bit, but as you can see, the recovery is quite poor and likely going to continue moving lower here. So here's an opportunity or an identified stock that was very strong, but that trend is starting to come to an end. So that's how you can quickly identify stocks in all 4 categories using this OptionsPlay tool. And you can create any watch list, right? You can use the pre-built watch list as well. You can use, for example, we use the Swedish derivatives watch list. This is all the stocks that you can trade options on here in Sweden. And you can quickly look at all the bullish stocks. So everything that has a score of 7 or higher, that's green across the board. Those are strong stocks with a bullish trend. Anything with the high score but a bearish, a green, a red or yellow across the board, like ABB, like Husqvarna, like Interim, JM. These are all stocks that are strong but starting to turn around. So I can quickly visually look for these without having to go one by one down the watch list to see which ones have bullish or bearish opportunities. And then if I'm looking for bearish opportunities, I can quickly scroll down to the bottom of the watch list. Swedish Match, Axfood, AstraZeneca, FingB. All of these stocks are stocks that are bearish and are underperforming the broader markets. And if I'm looking for those turnaround opportunities, I can see like Nokia came up as one, Saab came up as one. There's not a whole lot of bullish turnarounds here. SAS starting to turn around. The 1-month trend just turned bullish here. So maybe SAS, in terms of the airlines, starting to see a little bit of life off of those lows. So as you can see, this trend just started here on November 18th. If you believe in a recovery of the airlines, here is a potential early opportunity to go for a long opportunity here for SAS. And then you can then look at options that you might want to buy on it. And that's really where the OptionsPlay tool comes into play. Now, today, I'm not here to spend too much time on the options piece because we have a lot of education on the options piece. Today, I really want to spend some time giving users a better understanding as to the different types of technical tools that a trader like myself with 15 years of trading experience utilizes in my trading, and the challenges that you come across as a technical trader, which is the fact that there's just so many different indicators, so many different charts, so many different ways of analyzing a chart that you might find yourself actually more confused than anything else, and how OptionsPlay solves some of that problem for you. Because I built this tool to solve those same problems for myself. I was the type of trader where I had learned to use all different types of indicators. So if you look at H&M on a chart here, You can use a moving average, you can use an oscillator, you can use a market breadth indicator. These are all different types of indicators that you can use. And sometimes you just get conflicting signals. And there's just one moving average on here. I see many people that have 3, 4, 5, 10 moving averages on their charts. And it really just becomes overwhelming to be able to get that information. So I wanted to show you, from my perspective, which ones are important and how I use options play to consistently use the same indicators day in and day out to gauge that consistent reading. So when I use the 1 month and 6 month trend algorithm, that algorithm doesn't change. It's the same one every single month, every single day. So it applies the same logic to all stocks. So you're never going to today use the 200-day moving average, tomorrow use a 50-day moving average, and constantly shift around and get different views. You're going to use the same method every single day in and day out. And then the relative strength ranking is a very important metric that's very difficult to do, on a chart, right? It's very difficult to measure how is H&M doing compared to the broader markets. Now, if you have a charting package like the ones that I have, what you can do is you can do math. You can have H&M divided by OMX S30. And what it does is it shows you a chart of H&M, H&M underscore B divided by OMX S30. I keep spelling it wrong, sorry. OMX S30. And what it does is it shows me a chart of the H&M stock compared to the broader market or the Stockholm S30 market. So what I can see here is over the past couple of weeks, H&M has outperformed the markets multiple times, broken to new highs. So that, from my perspective, is encouraging to see H&M not only breaking out above the 200-day moving average on an absolute basis, but it looks like it's also outperforming the broader markets. So when I'm looking for opportunities like this, that helps me identify that H&M is a potential bullish candidate. And if I go to options play, it already shows me the 1 month and 6 month trend is bullish. It shows me that it's a score of 9, telling me it's outperforming the broader markets. That's exactly what I want to see if I'm looking for a bullish opportunity. And notice how options play actually identified this stock when it was trading at about 153 crowns, 154 crowns on November 5th. And we've had this move here up to 188 crowns since then. And the 1 month and 6 month trend has stayed bullish that entire time. So this is how you can use the same tools that I have come to develop from my trading in the options play tool. And this is all available to you, again, free of charge as part of your options play tool. So, and then once you have that directional view, then you can start looking at option strategies, whether you're buying the stock, whether you're buying a call option or a call spread. We have webinars and courses on these types of strategies. So if you're still learning how to trade options, I highly recommend you to take a look at our courses. Our courses are all designed to help you better understand access to these types of education. So with that, that covers what I wanted to share with you guys here today. I want to thank everyone for taking the time out here this evening to learn a little bit more about what we have to offer here at Options Play. I hope that this was useful in giving you a better understanding as to how to utilize the tool and how technical analysis can be useful for you to quickly scan for opportunities without having to go stock by stock by stock by stock and look for opportunities. How Options Play has automated a lot of that here for you. So with that, I want to thank everyone for taking the time out here this evening. At this point, what I'll do is I'll open this up for Q&A. We have both a chat window and a Q&A window. If you don't mind, please type your questions into the Q&A window at the bottom of your screen, and I'll answer your questions about technical analysis through the Q&A window. I will try to address a couple of questions here that were posted in the chat window while I was talking, but if any new questions, please type them into the Q&A window. So Corinne asks, what about stocks that are not traded that much on the market and have low volume? So here's the thing, low volume just means that you have less weight behind each chart, but a price is a price. If someone trades the stock at a specific price, that is a real transaction, meaning two parties have agreed to a specific price. Even stocks that have low volume have traded prices. It's obviously harder to do analysis on something with very, very low volume, but pretty much anything that has listed options on them will trade usually at least a few 100,000 shares. And that's more than enough for trading, in terms of technical analysis. A lot of noise in the Swedish markets compared to the American markets. I'm not sure I agree with that. Again, a chart is a chart. I don't necessarily know that these charts are any noisier than the markets, but that's also part of why we use technical analysis to filter out that noise. So I don't necessarily know that you have more noise in the Swedish markets, to be perfectly honest. The relative strength, is that showing towards the Swedish index? So what we're doing here is we're comparing Swedish stocks against all other Swedish stocks or all Nordic stocks. So yes, it is effectively comparing it. We're not comparing it to the actual Swedish index. I'm only showing this to you because that's the only way to gauge relative strength off of a chart. What's much better is actually ranking stocks against each other, ranking the performance and the momentum of each stock against each other. And that's how the score works. The score is actually ranking all Nordic stocks against each other for that. Will there be a recording of this event so we can look at this later? Yes, all of our events are recorded. I want to send you the link on how to access the recording here in 1 second. Give me 1 second and I'll send you guys the education link. Okay, so I just posted a link into the chat window. So we have this website where all of our education and all of our webinar recordings are hosted. So if you go to this website, which I just posted a link into the chat window, there's a section called webinar recordings. You can access all of the recordings here through the tool. So every single webinar we've ever hosted, you can find it on this particular page. And it's all designed to give you a better understanding as to how to trade this. Where does the options come in? How would we trade this with options? As far, we have a lot of courses on how you can trade options. So I recommend that you take a look at this education page. So for example, Options 101, Speculating Bullish and Bearish Markets from December 5th of last year. This is a good webinar if you want to take what you've learned here today and translate them into bullish and bearish option strategies. We also talk about adding leverage with limited risk on January 22nd. That's a good one for looking at adding leverage and utilizing options to play these directional plays. So yeah, there's plenty of ways. So I highly recommend you to watch the recording for that. Where is the broader index on this chart? I'm not sure what you mean, but you can type in OMX S30 to get the OMX 30 index on your OptionsPlay tool. So the symbol for it is just OMX S30. Corinne is saying next event from OptionsPlay. If I'm not mistaken, our next event is 2 weeks from today. We usually do a 2-week cadence. So it's always Wednesdays at 5:30 p.m. Central European time or Stockholm time. And we do it every 2 weeks. What are the lines in the software on the chart? Support and resistance? Yes. So for example, if we go back to H&M, as you can see, there are lines on the chart that are drawn for you. This is the horizontal lines that I was referring to, right? So let's go to H&M. You can draw these lines yourself, right? You can generally see kind of the fact that there is clear support or resistance here, right? Because you have one peak here, multiple resistance levels here, broke out above it and came back to retest this as support. So if you had to draw these lines manually yourself, you could do so. You can also draw this line here if you want to go a little further back. As you can see, this line goes a little further back here. You have multiple support or resistance It also tested this level here before breaking out. So as you can see, the level here that I drew was around, let's see, this line that I drew here. Let's just do this real quick. Horizontal line, this was around 168 or so. The second one I was referring to was around 179 or so. So if you go to OptionsPlay, this is already pre-drawn for you. So as you see, 168, 180. So those are the two that I just drew for you based on my knowledge of technical analysis. We've automatically drew those for you here on OptionsPlay. The next one we see above is 188 and 206. So if we look at this chart, 188 is basically this one right here. Now 188 is an interesting one because it's one that I don't think everyone would have automatically drew, but it is an interesting one because as you can see, there was a gap here at 188, another gap here at 188. This became a support or resistance level, not as big. And the next one was 200, I think it was. Let's see, 206. 206, as you can see, is this one all the way up here. So it's basically automatically drawing all of these trend lines that if you were a technical analyst, you would just have to look at a lot of charts and go back and try to draw these lines. It just gives you an idea as far as where historical support or resistance lines, and it's automatically drawn for you. Are there any plans to include Norway in OptionsPlay? So we only have the Oslo index. The reason that we don't have Norway is because the Norwegian markets is a separate exchange, meaning the Norwegian equity markets are a different exchange. The Swedish, the Danish, and the Finnish are all on the NASDAQ exchange. The Oslo is on the Oslo Bourse. We simply don't have a relationship with Oslo Bourse, so we only have the OMX O20 index, which is the Oslo 20 gross index. You can trade index futures on that, but right now we don't have Norwegian equities. That's where the noise comes in. A lot of different levels to look at. How do you handle that? You mean you have the same problem here in the US. I mean, the US has the same levels. So just to show you, for example, if we look at Apple, I can draw just as many levels here on Apple. We're talking about the most liquid, biggest stock here in the US. I would draw a line around here. I would draw a line maybe around here. Whoops. I would probably draw a line around there. That's a nice trading range here. But then I would also draw a line here. I would also draw a line down here. There's lots of lines. No matter what market you trade, there's always going to be a lot of different lines. So I'm saying my point is that the Swedish markets are not any more volatile or more noisy than any other markets. That's just the price action of stocks. You only really have to care about the two closest ones, right? So even though there are all these lines, I really only care about 108 and 121. I don't really care so much about 137 and 99 unless we break below 108, then my target to the downside would be 99. But 99 doesn't matter until it breaks that first one. So you really only care about the two that are closest, right? So if we look at H&M again, I only really care about this 188 and 180. These are the only two that I care about for now. If it breaks above 188, then I care about 206. If it breaks below 180, then I care about 168. So you don't have to actually look at all these lines at the same time. You only have to worry about the two closest ones. Okay, let's see. Any other questions? How do you look at, for example, the OMX S30 and the SPY SPX? A lot of time frames, I feel the OMX follows the US markets. So we also have OptionsPlay for the US. For those of you that want to have access to it, it's not free of charge like the one you have for the Nordics, but you can go to optionsplay.com and sign up for a free trial for the US version of OptionsPlay. And there's also lots of charting packages, such as what I have here, like TradingView, that gives you access to all markets, global markets. That's part of why I use TradingView, because TradingView, I can pull up Swedish stocks, Swedish indices, US stocks, Canadian stocks, Nordic stocks, all of that. It's all available, and that's part of why I like TradingView for my trading, for my charting. So we offer these webinars every 2 weeks. We don't offer one-on-one training, but these trading classes are very close to one-to-one. You get to ask questions. I answer all of your questions here. So that's really the closest that we offer in terms of to one-to-one. Any other questions before we sign off here for today? I know you would. I appreciate it. Unfortunately, I run a pretty big business here, and I don't quite have time to do one-on-one. I would love to, but that's just unfortunately. I get much more scale. I prefer teaching a lot of people and everyone getting this education. Thank you so much, everyone, for the thanks. I appreciate it. I'm glad that you watch us on CNBC. I don't know if everyone here in Europe has access to CNBC, but I am on a show on CNBC on television on Friday nights at 5:30 p.m. It's a show called Options Action. So where every single week we bring up 3 trade ideas. It's usually the US markets, but it allows you to understand how, as traders, we, number one, identify opportunities. How do we look at the technicals? I always talk about the trend. I talk about the relative strength. Carter does the same thing. He's a technical analyst. And then more importantly, we also show you how we take that idea and we play that idea using options. So if you're learning how to trade options, it's a great way just to get a sense for how a professional analyzes the markets and then decides what is the right option strategy to take for the directional view that we might have on a stock or ETF. It's a great way to learn if you're relatively new. For those of you that say you're not able to buy American options, the one thing I will point you to is Interactive Brokers. Interactive Brokers is one of the few global brokerage firms that allow you to trade Nordic options, US equities, from one account. So Interactive Brokers is also very low cost. So if you're trading options, and you may find that some of the Nordic brokers are very expensive from a commissions perspective, the Interactive Brokers is another place that you can look to trade these global markets and at a fairly low cost, in my opinion. And you can trade multi-leg options at Interactive Brokers up to 4 legs. So you can really trade, the different types of strategies that you might be interested in trading. So with that, thank you so much. I really appreciate everyone taking and participating here today. We have something called ISK in Sweden, which gives us a very low tax rate. Yeah, we have similar type accounts here. Hence, we cannot use Interactive Brokers. It will cost is 30% extra in tax. I understand that. So, for those of you that are not trading trading in a taxable account, then you might want to look at Interactive Brokers. Obviously, if you're trading in your ISK account, there are some limitations there. So thank you for that feedback. Is there any other questions before I sign off here? If there are no other questions, thank you so much. I really appreciate everyone taking the time. I hope that this was helpful in giving you a better understanding as to the first piece of how do you determine the directional view of a stock. And hopefully we showed you a bit as to how you can automate some of that process and simplify that process for you using the OptionsPlay tool. So with that, thank you so much. We will send out the recording here once we finish processing in about 30 minutes or 45 minutes or so to your email address so that you can watch this at your own time. And we will also post it to that page, the options education page, so that you can look at it along with the other education. And I'll just send the link again into the chat window for those of you that want to access this page. So with that, thank you so much. Have a great trading day, and I'll see you guys here in 2 weeks.